This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, January 22nd, 2016. Eurodollar. So the market continues to show signs of topping out, putting in a potential lower top at 110.60, and recent rallies towards 110 have been well capped, with the market rolling back over. Key support now comes in at 107.11, with a break below to expose a direct retest of the December 2015 base at 105.21. Ultimately, only a break back above 110.60 would force a shift in the structure. Sterling dollar. So cable is finally seeing a welcome recovery out from recent lows at 140.80, the lowest level since March 2009, and the market is now showing plenty of room for additional corrective upside before it even considers the possibility of bearish resumption. At this point, look for a break back above recent highs at 143.40 to open the door for a more significant upside extension back towards the 145 to 147 area. Dollar yen. So dollar yen has been consolidating off recent lows after taking out the key August base at 116.30, and the market is now approaching key resistance towards the 118.84 area. At this point, while the market holds below 118.84, the downside pressure remains intact, and there's risk and scope for additional weakness below this week's 115.97 low and towards the 112 area further down. However, if the market can establish back above 118.84, this would take the immediate pressure off the downside and suggest that the market could be poised for additional upside. Euro Swiss. So Euro Swiss continues to grind higher over the past several days, with the market breaking out from a contraction in volatility and suggesting that it wants to trade higher back towards the September 2015 peak at 110.50. A break above 110.50 would expose and open the next measured move upside extension towards the 115 area further up. At this point, any setback should be very well supported towards 108, while only back below 107.15 would compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie is doing a good job of recovering after the market failed to break below last week's lowest level since March 2009 at 68.27. At this point, there is scope for additional corrective upside towards the 71 to 72 area, while ultimately the market shouldn't be able to really establish above 71 on a close basis, and certainly not above 72, before looking for the next lower top in favor of the broader underlying downtrend. Really, Aussie remains in this downtrend, and only back above 73.85 would compromise that outlook. Dollar CAD. So finally a welcome relief for the Canadian dollar, with dollar CAD pulling back after seeing some parabolic price action earlier this week, resulting in its highest levels since April 2003, with the market trading up to 146.90. At this point, the sharp declines are showing more room for setbacks towards previous resistance now turned support in the 140 area, from where a fresh higher low will be sought out in favor of a bullish resumption. Kiwi dollar. So Kiwi is finding some support this week in the mid 63s to the 63.50 area after trading down for much of early 2016. At this point, the price action is classified as corrective, and although we could still see additional gains towards 67, any gains are viewed as corrective in favor of a lower top and a resumption of the broader underlying downtrend towards the 61.30 2015 low, which is the lowest level since May 2009. At this point, only back above 69 would compromise the current bearish outlook for Kiwi. SPX 500. So the S&P 500 is finally showing the first recovery in 2016 after breaking down below the August 2015 critical base at 1834. The market traded down to as low as 1811, but could now be looking to base out in favor of a correction back towards the 2000 area. Ultimately, though, any rally should be well capped below previous support now turned resistance at 1993, with only a break back above to compromise the current newly adopted bearish outlook for the S&P 500. Gold. So gold had a meaningful breakout in early 2016, with the market taking out critical resistance at 1100. This break now suggests that the market could be putting in a more meaningful base off that recent 2015 multi-year low at 1046, opening the door for fresh upside over the coming weeks back towards the 1200 area. Look for a break back above recent highs around 1112 to strengthen this outlook and accelerate gains, and any setbacks from here should be very well supported ahead of 1070. Ultimately, only back above 1070 would compromise the newly adopted constructive outlook for gold.